This is Daniela Camboni for Kitco News, continuing our coverage from the Toronto Investment Conference, and I'm here with two of my favorite gentlemen, Mickey Fulp of the Mercenary Geologist and Brent Cook of Exploration Insights. But Mickey, why did we decide to have this interview in a bar?
Well, I think most people know that geologists are the only alcohol-based life forms on the planet, so it makes all perfect sense to do that.
We'll cheer to that.
Okay.
We'll cheer to that.
Yes,
But talking business now, one of the main reasons people do come to this show is to know where they should be investing. Brett, what do you think are some of the main traps or typical traps people tend to fall into?
When I used to work as analyst at Global Resources with Rick Rule, we dealt with retail clients, and they would end up with a list of 25 to 100 to 200 stocks that they bought, and they didn't really know why they bought it, why they held it, or what they expected to happen to make the stock go up and then to sell it. So the biggest mistake they made is not really understanding why they're buying a deposit or a project or a company, and then knowing how to interpret the results as they come. And if you don't do that, you're going to lose money 9 out of 10 times in this sector, right?
Mickey?
Absolutely. It's a very high-risk sector. I think people, and this is part of what Brent and I both do, we try to educate the lay investor, and to me there are three key criteria: share structure, people, and projects, and they all got to be right. And the other thing I always want to look at, and I think lay investors should pay particular attention to, is undervalue. Buy them when they're down. So any junior will double in any given 52-week period. So the key is to buy at low volumes and low prices and sell at high volumes and high prices.
So is this a perfect time then for gold stocks?
Well, the gold sector has certainly been beat up. We've seen the price of gold skyrocket this summer. Gold stocks have not participated. So yes, this is a good time to be buying on weakness.
But should people be selling some of their physical gold to be buying gold stocks?
Oh, absolutely not. Physical gold is your basis. I'm a firm proponent of the idea you keep 10% of your net wealth in physical bullion, not paper ETF, physical bullion. Use the junior resource sector, that's gambling money. So it's a very high risk, high reward sector.
All right, so how can we manage some of this risk? What are some of the things you look for?
Good. I got one question for Mickey though. If you say any junior company will double over a 52 months time period, isn't it also just as true that any junior company will have over that same time frame?
Absolutely, it works both ways. So, and that goes with the idea you want to buy it near its low. So you don't want to buy it when it's on the uptick. You want to buy it when it's unwanted or it's in a dormant period. So it's key idea here is to look at charts and figure out where the base is, and don't go in and buy stocks that are on the run up. That's something that I tend not to do.
Is that your strategy as well, Brent?
No, it's not actually. I would say my investment, the stocks I buy, is based maybe 5–10% on how the chart is actually going, and if that's telling me something. But I look at a company and a project in terms of turning the rocks into money, as opposed to turning rocks or money into rocks, which is what normally happens. And that all comes down to you need to have some sense of what a company's project is ultimately going to be worth. And to do that, that means you have to know what the metallurgy is probably going to be, what it's going to cost to get that out, what it's going to cost to mine it, and what it's going to cost to build it. And I look at things, and I think Mickey would do the same thing, is I need to see, I want to only buy projects that offer me the chance of being the highest margin in that particular metal, being in their production cost in the lower third of the industry average. That's really, really important. Otherwise, you get stuck with a stock or a company that's got a marginal deposit that the bankers are going to finance. They're going to keep financing and diluting at lower and lower share prices. And the bankers make good money, but we as investors don't. So you need to know what the basics economics are of a company. That's what I do most of my work on, 95% of it.
All right, let's talk about hot areas right now, areas in the world that you're particularly paying attention to now, Mickey.
Well, I tend not to look at areas so much as I look at commodities and particular companies. So I'm not big into area plays. Any company that I look at, I want to know that it's in a geographically and geologically favorable environment, and that the geopolitical risk matches a potential reward. But for me, it's really potentially the company that I look at and not specific areas.
I know you'll care about political stability, Brent, as one of your factors when looking at places.
The higher the political risk, the higher the reward would better be. I'll go almost anywhere, depending on what the prize is. That said, there's places I won't go, and I think Mickey would agree. Like, there's no way you'll get me putting money into Venezuela. I personally wouldn't put money into China, Bolivia. I mean, there's a number of places I wouldn't go. But it's not just country specific as well. It's regional specific or locality specific. In Argentina, there's great places to go look for a mine, and there's really bad places to look for a mine. Same in the States. So no, I'm not. You know, politics is important, surely.
All right, I just want to switch topics now to uranium, because from what I hear, you two are on opposing sides here. So who's bullish, who's bearish on this metal?
Let's listen to Mickey first.
Well, I'm giving a talk very soon called Why I Remain a Uranium Bull. And I am a uranium bull for the short, mid, and long term for one basic reason: supply-demand fundamentals. We are using in the world 30% more uranium than we mine every year. Supply stockpiles are dwindling, and the Russians are going to end their nuclear bombs to nuclear fuel program in 2013. So we have this fundamental supply-demand deficit that has to be made up by new mines.
All right, Brent, why are you not so excited about uranium?
Let me ask you something. Do you own a Chinese-built car? Would you? Would you, Mickey?
No, I own Fords. Ford trucks.
All right. So we've seen what's happened with their rail system, their high-speed rail system. They've been building in the order of, I think they built 40 new nuclear power plants. I've seen work they've done in Africa, you know, and this is a generalization, but let's just say that something goes wrong with one of those nuclear power plants that they've been building. That kills the whole industry, and that is really going to be a negative on it. And Mickey's right. I mean, I believe uranium offers one of the best green, if you will, energy sources, but that is a serious issue out there, and I'm concerned about that. So I'm not buying uranium stocks.
All right, I'm going to give the last word to Mickey.
Well, I would counterpoint that with the reactors being built in China right now are modular reactors, and those are basically being supplied by either Canada or the United States, the components of those. So you're depending, I think, on a black swan event to set the uranium industry back again. Now, I'm not saying black swans, we don't know when and where they're going to occur, but just from a long-term fundamental point of view, uranium, nuclear energy is the cheapest and cleanest energy we have, and I think it's the answer going forward in the world.
I'm with you on that. I agree. I'm just concerned about these black swan events. There's no shortage of uranium in the world. There's deposits out there that, you know, are ready to go. So if you do buy uranium, I would buy someone that's got an asset. Don't go for explorers. Buy someone with an asset. And this is a good time to be buying because they're undervalued. So, you know, with that in mind, yeah.
And I will agree with that. Buy companies that are very advanced explorers or developers, or even companies that are new in production. There's tremendous upside now in the market for those.
All right, well, we heard lots of good advice from both of you today. Thank you so much for joining me, and we'll see you all soon. You can email me your comments and questions at newsfeedback@kitco.com for Kitco News. This is Daniela Camboni reporting from Toronto.
Cheers.